everybody. It's Jessica Stone at Stansberry Research, and I've reached Brian Tycangco, analyst on True Wealth Opportunities China, for a conversation on all the hot money now going to China. We just read the May report. $19.4 billion is now invested in Chinese government bonds. How safe are these investments, Brian?
Hi, Jessica. Actually, $19.4 billion went into the Chinese onshore bond market in May, and that I guess the total now amounts to about $340 billion of foreign holdings in Chinese bonds. That indicates that there's a big appetite for Chinese bonds, despite what's going on in the world market with the tensions between the U.S. and China, and that speaks to the opportunity right now, and as well as just how much money is sloshing out there with QE.
What kind of yields are they getting that are driving them there? Because we know in the West, in the US, people are getting 0%. So there's obviously nowhere to go but up from there.
So the bond yield differences between Chinese bonds and U.S. bonds, basically for the treasuries, government issued treasuries, is about 1%, and that's widening. So 1% is huge considering these are the two world's biggest economies, and you have a 1% difference in the yield there for government issued treasuries, and bigger for corporate bonds. So there is a big risk appetite right now for higher yields, especially with yields in the US being pushed down.
Why can China offer those yields when the US can't? Does it have to do with the value of their currency?
The reason Chinese government bonds offer a higher yield than the U.S. is that the Chinese economy is actually doing much better, and the yields there have traditionally been much higher than the U.S. and they are not going through what we call quantitative easing. So there is not an abundant supply of cheap money over there.
So, what is the prospect, do you believe, of another Asian financial crisis? I mean, we saw the Asian financial crisis in the 90s begin this way, where there was a flood of investment into currencies and places that didn't have stability. Would you argue that China has more stability than them and thus we wouldn't see one? Or do you think it's still a possibility?
I think there's a very little possibility of another Asian financial crisis. I lived through it, and I saw the reasons why there was one. It was just binging on debt with countries that couldn't afford it, massive expansion in infrastructure, and without the ability to repay those debts, and weak foreign currency reserves, which made them sitting ducks basically when it came to wholesale devaluation. That's not the case anymore. Most Asian countries right now have great finances. Their governments are well financed. Foreign reserves are almost at an all-time high. In China, of course, you have a different thing playing out there. It's not easy to attack their currency. So I don't think that there's going to be another Asian financial crisis.
There's always been this thought when we talk about the amount of U.S. Treasury debt that's owned by the Chinese government. I think it's trillions of dollars, about 1 trillion of our debt. There are definitely a lot of people concerned that that gives them leverage over the United States. Could you see a situation where so many U.S. investors get into Chinese sovereign debt that the tables are turned?
It's unlikely today, but I think in the next 15, 20 years, that might be the case. The Chinese bond market is really opening up, and this opening up, there's an onshore market and there's an offshore market. The offshore market usually commands a lower interest rate because it is offshore. It's basically considered safer for China for foreign investors, but then they're offered lower yields, and the higher yields in onshore. There's also a risk there because you have to put your money into China. Now they've basically tried to open up their financial sector, opening up. They've liberated the quotas. They've allowed smoother, easier flow of portfolio money in and out of China, and that's really the key there. More money is going to come into China over the long term, not just now. And whether or not Americans are going to end up holding a lot of Chinese government bonds, that's a possibility. Right now, of course, we don't see that happening, but there's certainly a lot of appetite right now for Chinese bonds internationally, whether it's from the US or from any other country, because of the attractive yields and because of the fact that this economy appears to be right now the only major economy getting back up on its feet from the coronavirus.
And as you say, its financial reforms seemed almost perfectly timed for
Yes.
Western governments and Western investors to take advantage of. Brian Tycangco, always a pleasure to talk with you. We love getting your thoughts on investments in Asia writ large. And if you would like to see much more content just like this, please do subscribe to this YouTube channel. You can also find us on Facebook, Instagram, and Twitter. That's all for now. Thanks for watching.